Good morning, everyone. Good afternoon and evening. So today, actually, not having a really that many tradable ideas in the morning. But the good thing is, we looks like we're getting a bounce. A small bounce. So which could favor the short side. Maybe. You didn't get stopped out in SNDK? Yes, I did get stopped out, but I re-enter it. At the 21 EMA daily, 60-minute 150 EMA, 15 minutes breakdown. So yeah, actually, I'm not that pleased with my entries yesterday. Got too many losses in the earlier part of the day. But still, I think it's manageable, and I'm not like sizing up after the losing streak, and so I think I really do it okay. I'm not like losing my mind and keep shorting every bounce, and regardless of the risk or the market. I think it's also important. Like me 2 years ago, 3 years ago, probably would like size up when I got stopped out, because I would like to make the losses back as quick as possible. The faster, the better. But that is the first step that gonna put you in a vicious cycle, and then eventually a larger drawdown. I believe the wolf is my target today. But I'll try to be a little bit more patient on this one, learning from yesterday's mistakes. And the Qs and SPY is a little bit extended from the in the lower time frames, extended into the downside. Hmm. Maybe I'm too late on this one. AMD is actually looks very nice right here. Will this be a failed? A failed high tide flag, maybe? Or like can it successfully or breakout, or is it a clean breakout on the daily and also the weekly too? given the weak actions in the general market and also the semi sector, yeah, I think the odds of AMD really having follow throughs into the upside is quite low. Yeah, but I'll still like keep monitor this thing in case the market suddenly turns higher. Mara stopped me out yesterday and now it is showing weakness. Yeah, that's very unfortunate. And sometimes like it really makes I think it's also one of the reasons it really makes trading difficult. It's there are a lot of the times that the stock, the price does not follow your expectations or knocked you out before going your way, going your way. Yeah. So maybe your original idea was right, and you're also executing it really nicely, but you can still be losing money. And this wolf as well. Like today, I decided to be a little bit more patient and wait a little bit longer and didn't take the first 5 minute reversals, and then now it's having a pretty strong follow through into the downside. But yesterday I just kept stopping out in the first 15 minutes of the day. Yeah, I think a lot of the names is getting some resistance, selling off quite heavily after the open. Looks like the defensive sector is leading, the mid cap is leading, but the tech stocks is getting beaten down. If SNTK or the MU or all the other semis leader, the AI names really topped in June a few weeks ago. I think this entry is Yes, I mean shorting yesterday would be the best timing for it, especially as NDK during this whole uptrend is serving the 50 EMA, and now it's starting to lose the 50 EMA, and then we got a bounce into the declining 50, which is the first time after this uptrend. Could it serve the 50 EMA down, all the way down? No one knows. We will see. This correction may be more deadly, maybe more destructive than we think about it, than we expect. Because we got a very, very strong uptrend since the tariff war, the Liberation Day. Although on November to like March, we're going sideways, and we got a lot of chops. But a lot of people buying the AI names, like they're doing very fine. Actually, some of them are, for example, MU keeps going higher after November. And I believe a lot of traders, a lot of people built a habit or built and formed a mindset that that the stock market keeps going higher. Like buying every dips is the way to make money. It's the way to like, it's like a printing money from the markets, because every dip is getting bought. After every pullback, the stock would come back and even makes a new high. I'm not saying this correction will be the end of the rally, but if it does happen, I think a lot of people will get smashed, and because of the poor habits, the wrong mindset that formed in the uptrend, in the lockout rally. In the stage 2 market, and it happens again and again. In 2020 and 2021, I think it's the same story. Everyone is buying maybe Tesla or the EV's name, because it keeps going higher. Like even we got a 35% correction right here, but Tesla still managed to break out from the high, and a lot maybe T-Dog, also one of the names that is very hot in COVID, or the fasting names, and or even a lot of the the shit codes, the speculative names that already got delisted, that you cannot find it in the market anymore. A lot of people are crazy fans on those stocks, and eventually watch the capital to be sliced in half. And it's the it's the danger lies beneath the surface. I think in a bull market, in a very strong uptrend, a lot of the mistakes would be forgiven. But when the market's starting to slow down, deteriorate, or even start a bear market, you're gonna lose all the money back. Buying the dips until it doesn't. Yeah, but it's hard to adjust. It's easier said than done. I think a lot of people like is uh, many people are chasing the leader like the SK Hynix. Most likely in the last leg up, I think before the last leg up, like before April, that the heat on SK Hynix is, or the other semi leader is not really that crazy. But I think on this leg up, lots of people are talking about it, and I believe it's most retail traders notice and trade this thing in the last part of the rally, and with leverage, with margin, even with loans. I'm sure there will be another one, another SK Hynix in the future, and we will see the same thing again. The ticker changes, but they maybe that also the people changes, but it's actually the same. how did you trade during the bear market, the 22 to like 23 period? I'm trading really bad. I don't know. I think I'm up like 4% or 8% in 2022. I don't know how to short, and also got chopped up quite a lot, I think. But actually, I think in 2022, my number of trades is definitely reduced a lot compared to 2021, because I'm still quite long focused back then, so I rarely short, and nearly all of my shorts uh did not work, losing trades. But I believe the best trade I made, I have one really good trade I've made in 2022 is the natural gas long. I I believe um I bought Boyle, like it's the natural gas ETF, uh either on this day or this day. And then I keep riding the trend. I believe I I keep selling into strength, and then I sell my last piece on the top, probably. I think it's one of the best trades I've made. Even including like the recent years. I believe I bought it on this day, or maybe even on this day. I don't know, but yeah. And then I keep trailing it with the non-EMA all the way up, and I think I probably still sell my last piece on the gap down, but I'm holding like only maybe 20% of my original position on the last day. So I think most of my return in 2022 like comes from this trade alone. And I also remember when it's starting to get to getting a little bit extended and accelerate into the upside. I asked the question in Christian stream. Like most of the time, I think 99% of the time I stay really quiet in the stream. I'm just listening to Christian yapping and talking about anything he sees, anything he considered interesting, and yeah, rarely talked in the chat. But I believe in the last few days of the rally, because it's kind of extended from the 9 EMA, like 17% above the 9 EMA. And Christian always tells us to use the first close below the 9 EMA. Like don't sell too early. Just trail it with the 9 EMA. And I believe it's probably this day or this day. Like it's starting to really get accelerated, and I'm feeling like a little bit I can sense the danger. Like I can sense like it cannot go up forever, and it looks like it's also a little bit looking like a parabolic shot. So I asked him, I bought this boil and it's very extended from the 9 EMA. What should I do? Should I wait for the close below it, or I just close it into the string? And I still remembered his answer. I believe he said yes, it's definitely extended, and maybe it's not. I mean, you can. He said you can just like selling all into strength. You really don't need to wait for the close below the daily 9 EM, or maybe the daily 10 SMA. And he also talked about maybe you can use the 60-minute 9 EMA or the 10 EMA, like trail it in a smaller time frame, in a lower time frame. Yeah, I think it really makes sense. And I believe he also mentioned like he mentioned, he said something like this is a really good question, something like that. And then I was really happy about it. Like I'm asking a smart question, and yeah, and I remember it really clearly until now. And it's a it's a really good was a good old days. And hopefully we will see Christian streaming again in the future. Not yet. I haven't read his interview or in the new market research book. I have it. But haven't started to read it. Martin, do you think you are a genius for your age with that achievement? Uh, have you watched my Trader Lion interviews? The first one, maybe also the second one too. Do you think a genius would buy GME on the in the pre-market? Probably at, I don't know, 130, 140, 150. You cannot see my entry in the daily chart. It's because I bought it at the pre-market and then it went down by 50% in 30 minutes. I think this guy is a genius. Must be. Yeah, but I do consider myself a trading enthusiast, or like maniac. Like I really love trading, and not not only like uh the execution, like the when you're buying and selling, but also doing all the boring stuff. So like what I mean, listening to other traders' podcasts. I really find it interesting to like listen to other traders sharing their stories, sharing their their insights from their own mistakes, how they dig themselves out from the drop in the beginning of the days. Like I think when I was attending the lecture in the college, in the uni, I often like open the YouTube and then uh, watched a lot of like trading related videos. I think most of them are pretty useless. Like the best the best indicators, the 99% win rate strategy, the MACD plus the RSI plus Bollinger Band plus whatever indicators, like the secret indicators that no one used, like those like scam videos. I even watched. Yeah, I think I was thinking about trading a lot of the times. Yeah, so I think the difference really lies into the boring stuffs, but not during the market hours. Like I think most people will feel like yeah, trading is fun when the market's open, when you are pressing the buttons, when you are watching the tick ups and the ticking ups and downs. But But do you still? But are you still interested when the market is closed? When you are reading the books, listening other people's presentations? Yeah, I mean, if you really, it's not wrong when you cannot cannot find it interesting on the boring stuffs. But if you really, if you're not, um, yeah, having fun when the market is closed, when you're doing your study, then it's really hard. It's really hard for you to reach the level of maybe like consistently profitable or yeah, because yeah, I mean, developing every skills takes time. Like if I'm not having fun when I'm practicing, I don't know, the guitar. That's for an example. Then that will be really hard for me to become a professional guitar player. I think most of us will enjoy like um enjoy performing to others. I don't know, like joining a band and then like performing at a show in a concert to the audience. It looks very cool. It feels amazing. Like you're getting the spotlight in the stage. I think most of us will find it cool, but the difference really lies in the normal days when you're practicing, when you are learning the new chords. So if you're not finding fun when you're practicing your guitar, I think it's not a good idea for to like to set your goal to become a professional guitar player. And it's the same thing in trading as well. how do you stay focused? How do you not get overwhelmed by all the information, even when studying, but really stay locked in on what is currently going on? So you can execute with a clear mind. Um, hmm. Yeah, this is a really, really hard question to answer. I think I can split it in several parts. I think the reason why I focused on swing trading, but not like day trading, and then I also uh, chose I like trading uh, a similar setups with a similar strategy with Christian, like the breakouts, the EPs, etc. Maybe I um, differs a little bit. I deviate a little bit, but I will also cover that in the later part. But yeah, at first I mainly focused on the breakouts, like really trying to follow Christian's methodologies and setups. The main reason is actually very simple: is he actually he is a really good example of trading off his own setups and methodologies. He's the best example of showing how good this strategy works, how good this style of trading works. So yeah, so it helps me to filter all the noise out there, because like if you take a look at every I don't know uh other style of tradings, other strategies, other setups, many of them is don't provide any proof on how good the strategy really works. Most of them are just like in the description there's only a link of like joining the patrons, joining the membership, the discount code. No proof. Yeah, so I think that's the first. I don't know, like I believe that would be the main reason that I really focused that I focused on a Christian style at the beginning. But actually at before I really know about Christian, like really come run into I mean know about him on the internet. Like in the very beginning, I I was taught VCP at first, like the stuff Mark Minervini, and actually I think like Mark is also like Minervini is also like a swing trader, and a lot of the concepts and ideas is also actually pretty similar to Christian. Like also maybe uh setting stops, maybe Minervini using a little bit wider stop, but I mean um still they use stops and they really define the risk very clearly. Treat like the risk management as the holy grail, and yeah, swing trading maybe also talked about like the sector and the volatility contraction, like the range consolidation, tight ranges. Like there are a lot of like similarities between those successful traders. I mean, not only Minervini and Kolomaki, a lot of other swing traders also. Like I think a lot of overlaps between them. So it also helps me to like convince me. Yeah, I think maybe it actually works. Maybe it's the way. Yeah, and then like the second part is when I started to like deviate a little bit from Christian style. Uh, I always love um I always love I don't know like verifying with the market. Like when mm, I mean in the end like the market is the only one that's right. Like everybody could be wrong, but market is always right, right? I think that's a famous quote from I forget about yeah, where's the origin of this quote? But yeah, so um, I think it all starts from 2020, 2024, maybe 2023, when my when a lot I when I try to evaluate my losing trades, when I try to figure out what can I improve, what have I done wrong on the losing trades, I like I just found out a lot of the breakouts or even the EPs um, stopped me out, and a rally and continues going to its original direction, like if continues going up after stopping me out. And it's not only like, it's not occasionally, like I mean, if I got maybe 3, 4, 5 trades that it go against me at first, but then eventually it continues, it continues its way up, and I think it's possible. It's very natural that they would definitely would come across this type of situation when you have a huge number of trades. But the frequency is getting a little bit higher and higher in 2023 or 2024. And then I started to like trying to explore, or like trying to brainstorm. Is this the right way? Is this the best way to continue buying the breakout or using the opening range highs every time? Because market actually, I mean, like eventually I'm right. Eventually the market, like the stock is going higher. It's just my entry is a little is not right. So I starting to explore. Is it possible that I can find another type of entry that allows me to stay, allows me to stay on the boat and trail a really not get shaken out from the trend, not get shaken up from the breakout days, or when it really starts taking off. So I think that's how I discovered buying into the intraday pullback, and especially maybe the 5 minutes, like the 5-minute range intraday range breakouts. I mean, something like this. Like it actually happens very often. Like, it's not only like a rare case. It's very common. So I mean, if you buy opening range highs right here, and then it gradually the market have some follow through, but intraday rolling over stops you out, taking a low of day, and then it's starting to climb higher. It's starting to continue its way up. And also, if you neglect this day, like the second day also like going higher. Okay, that's one example. And then eventually, when you find 5, 10, 15, 20 examples, then why not? Like, why not like just wait for the shakeout and then buy the reversal? So I think two major takeaways from here is the first one would be like, do not blindly follow. Always verify with the market, or like trying to judge it, trying to really examine it And the second thing, yeah, actually forget about what I want to say. What's the second point? Yeah, whatever. I mean, just do your own study, and I think the conclusion or the observation that you made, yeah, the main point is you, rather than like simply listening to others sharing, listening to or apps or like only knowing only only knowing one thing without really understanding it. I mean, it's really different that yeah, between knowing one thing and really understanding one thing. And yeah, I think one good example is uh, buying breakout. Like everyone is talking about buying breakout, and the best breakout is the breakout from a tight range, from a maybe a nice looking base. Uh, I mean, if you like VCP while buying right here, like after it breaks out from the from the handle, from this base, from this really tight flag, that is the buy point. So you know this is the buy point. I think a lot of people understand, don't understand, like you will think this is the entry, the best entry. But why? Why it makes it the best entry? I think the first reason is you can really limit your downside here. Comparing if you're buying like on a random days within the trend, it's easy to shake you out, to get stopped out. And if you're buying on the breakout, most of the time, a good breakout won't like just keeps going, and yeah, yeah, higher rates of success. And the second, maybe the higher risk reward. You can limit your risk, and then if an uptrend really starts, if Tesla like range consolidation and then followed by range expansion, you can easily make maybe like 10R, 15R, 20R move after breaking out from such a base. So yeah, high risk reward, higher win rate. But how about trading pullbacks? I mean, breakouts and pullback looks like it's the opposite of the of the of the style of the entry tactics. One is buying up and one is buying down. But what if I put it on the dip on this 21 EMA on the pullback? Would it give me a potential good risk reward? Maybe, like if I can really define my risk when I'm entering on the dips. Could I have also have a high win rate? Maybe. I mean, some you have to like really verify it by yourself, like which type of pullback is healthy, is viable, which one is not. So actually, the fundamentals, like the reason behind the entry is the same. Higher win rate, higher potential risk reward is actually the same. I think it is it's I hope it's a logical explanation on knowing something and understanding something. And so that would mean studying your own trade and then find the issue, verify the issue with the market, come up with plan to fix the issue. As the main way of studying. I mean, you're correct. I don't know whether it's really my way of studying, because sometimes I really don't know what I have done, really. But I think your approach is correct. And I believe like being observant, like being uh you're trying to ask more questions, being a little bit more curious on everything in the market. Like why Tesla will find resistance here? Like when maybe sometimes you won't find the reason why. Why Tesla would like find resistance on this day and then continues lower. I think most of the time you may not find the answer, but if you keep asking the questions, keep trying to looking at the details in the market, gradually you will find, you will definitely find your own observation, come up with your own ideas. And that's the most valuable thing, because that originates from you, not the others. And it will work so much better, because you actually, you really understand what you are doing. I think most of the time we really don't understand what we are doing. We're just following what others tells us to do. I'm still amazed by the year you're having and the results I see you achieving at USIC. My goal is to be even 50% as good as you are. No, like, I mean, you try to be 150% as good as I am. And yeah, all the best. Do you think you can make too many rules around these ideas? Can trading become too rule based that it removes the art of trading? Or you do not believe in the art of trading? I mean, as a discretionary trader, I am on the side uh, of the art of trading. I I do believe, and I do really emphasize on the art. Like the trading art is really fascinating. So that's why I don't have really a lot of black and white rules that has a has a rule book or a checklist, a list of rules that I need to go through. I need to check every boxes before I buy or sell a stock. But it is definitely not wrong, or definitely not unreasonable to really make your trading systematic. I I mean, I think it, in the end of the day, it's just two different ways of trading, and in both ways could lead to like in really huge success. And there are no better style or like or a worse style, like systematic versus discretionary. And because sometimes it really depends on the trader, because some trader maybe found it very difficult to stay calm, or like to make irrational decisions. Like some traders may have like a stronger ego, or or lower level of self discipline that not will be like a more difficult to really focus on the execution, following the plan, instead of getting influenced by the emotion swings, or like getting tilt. If maybe systematic trading, or like having a set of rules would be better for them. So it really depends, and I truly do not believe there's only one way of trading. Like there's only one style, one approach, one methodology, one setup, one strategy, one indicator. No, I think it just it's just about you, um, which one suits you the best. I mean, I'm in a horrible mental place right now. I try to trade this job from day to day more aggressive, and this week I also tried it with options. Now I lost 80% of my capital. Uh, if you decided to like, if you're not giving up, if you decide to not give up and keep trying to stay in the game and uh keep improving day by day, I think this is a really good lesson that could be the stepping stone, or could be the aha moment of leading you into success. I mean, the best lessons are always in the drawdowns, in the mistakes, in the difficult periods, in the market crash. So the 80% drawdown uh, has been the sunk cost. Like the losses are made. But will you, or can you try to take the most from it? I mean, learning the most from it. And maybe even if you like decided to like stop trading, or maybe not, like even if you decide if you continues your way, continues learning, trying very hard in the coming months and years, in the end still not making it, it will still be a really interesting journey. Like you can brag yourself about, like to your friends, to your children, to your grandchildren, that, oh, you know what, I tried trading in the when I was young, and but I didn't make it. Like trading is really hard. Like blah blah blah. Why? Oh, this what's the stock market is like. I bought this one, and then it keeps going down, and eventually I lost all the money. It's actually still a, as long as the money is not really life changing, like you're not losing all of your money in your bank account, like it's only a really small. It's only, looking back, it's only really small, a small setbacks, or it's just, you can just an experience, like to prove at least you have tried, and if at least you have made some efforts. Or maybe, maybe when you're like 60, imagine you're like 50 or 60, you're planning to retire, you already like got a family and kids, and some of your friends out of nowhere maybe like tells you, hey, this thing, I don't know, maybe not SK Hynix, maybe this one is called I don't know, SK whatever, like maybe like SpaceX, maybe SpaceX like 20 years later, like um is launching its first like spacecraft into the to the Mars, and then the stock's starting to like going parabolic, like up 500% in 1 month, and up maybe like 5,000% in a year. And then some of your friends are telling you, hey, this SpaceX is definitely going to the moon, like going all in, like you put all of your money into this one, like our human is going to be like uh, flying into the space. We're going to live in the in Mars. We're going to travel across the solar system. But because you experience this like AI bubble, this I don't know. It could be only the start of the bubble. I don't know, but eventually this AI trend would definitely fade away. Would end in one day, because you have like experienced this thing, this type of craziness. It may really save you a huge chunk of money, like save your fortune. And you're looking back at the losses that you have made today is is incomparable. Like it's only negligible to the money that you saved for like 30 years, 40 years. SK Martin. Next week is a pivotal week. More major companies' earnings and FOMC. What is your plan next week? Um, I mean those events are you really can't predict. And yeah, I mean it again. It all depends on you. Like, what is your risk appetite? Like, how can you uh, can you deal with the high volatility, or are you good at dealing it? Like, would you get shakeouts really easily, and will your mental like, will become really influenced by your equity curve? Like, for example, if we got a gap down day, 10% gap down, like your equity curve got smashed, maybe like down 10% in a day, would this lead to revenge trading? Would this lead to selling oil winners early, panic selling? Or actually, you really can handle your trades well, handle the volatility well. So if you really hate the drawdown, if you think yourself, if you think you cannot or not good at handling the volatility, then maybe it's better to reduce the exposure. But if you think you can handle it well, then it's not wrong. Like you're just gonna manage your positions as usual. Like it's I mean it, I mean, to me, I'm like a technical trader. I trade a chart, not the news, not from analyzing the fundamentals, the macro. So I really don't know. Like I think the chart would let me know. In your 2025 Trader Lines interview, you talked about buying 3 to 4 positions in one day and then pyramiding into more on a pullback. Is that your expedited version? Expedited, I don't know, of minute finish progressive exposure? Um, Sometimes I really increase my exposure very aggressively. For example, uh, yesterday, like on Wednesday at the open, I was still heavily long. I think I have 5 or 6 long position at the open, and then Thursday, I mean on Wednesday midday, I closed all my longs, and then I shorted SK Hynix, and yesterday, and then I really sized in into the shorts. So I believe it's very aggressive and a little bit dangerous as a sense, in the sense of, yeah, that it could easily lead to over trading, um, larger drawdowns. So you don't have to like really copy my style. And if you think this is too aggressive, then slow it down. Like you don't have to trade like this. You know, I think also partly the reason why that I get really aggressive this year is the positive feedback from the markets. Like I'm doing well, and I have more profit cushions, and yeah, I think at the end of the day, I think having the profit cushions really matters. Like if I'm not like up like triple digits right now, probably I'm not open like 6 or 7 short position in one day, and then trading that aggressively. So, but also I think the second reason is I get better and better to really um, monitor my trades. Like really knows how when to when to slow down, and not sizing up when I got losing streaks. I think it all they also helps me to get aggressive in the positions in opening positions and increasing exposures. Do you think the fact that you trade short side as well helps you to not become over bullish during uptrends and sideways markets like the last 1 and 2 months? Yes, I do. Yes, I think it really help. Yeah, it really helps. Like it helps to spot the weakness a little bit earlier. But definitely, like um, upsides always comes with the downside. Like sometimes I would be chopped up. Like if it's going sideways, if it's doing something like this, no trend at all, then I may get chopped up. And maybe sometimes I would get a little bit too skeptical or like too bearish when the market is pulling back or building a base during an uptrend. But um, to me, I think the benefits outweighs the disadvantages. Martin, do you consider volume in lower time frame? Not really, I think. Would you say that is a big part of your edge is your execution by being aggressive and front running other market participants? Um, Definitely, I gain an advantage when I'm sizing aggressively correctly. I mean, you have to do it correctly. So I mean, it's uh, like in hindsight, that you can definitely say, yeah. I mean, if you're getting in multiple positions when the market is still like it's still below the 50 EMA before the gap up, man, it definitely helps you to like boost your return and but what if on the other hand it failed and it will lead to a larger drawdown. So yeah, I mean risk always comes with reward. Rewards always comes from the risk. So it's actually a trade-off. And yeah, and I try to minimize the drawdown, really trying to manage the drawdown, trying to control the drawdown while maximizing the return. And it's not easy. So I think yeah, I definitely got lucky this year. So yeah, I think this is the end of the stream today. So have a nice weekend. Thank you guys for coming, and we'll see you in the next one.